The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Foundation podcast with Dominic Frisby, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to the Gold Money Foundation podcast, hosted in association with Frisby's Bulls and Bears, with me, Dominic Frisby. Now, I'm sitting today with the author of a wonderful book, Paper Money Collapse. The author is, of course, Detlev Schlichter. You're all no doubt familiar with him. Detlev, welcome to the show. I want to start off by saying, I suppose I want to start by saying thank you, and that many gold bugs, I think, owe you something, in that your book, whether by design or by good luck, has kind of taken the idea of gold and a gold standard and gold as an alternative currency back into the mainstream. You've been on the BBC a couple of times and a few people are talking about it. So how do you think the mainstream is reacting to some of the accusations that you're making about the flawed nature of our monetary system?
Well, I think you're right. The book was specifically written for the mainstream. I wanted to attack some of the deeply held beliefs and the common wisdom about money and our monetary system in the mainstream, among mainstream economists and in the financial industry in particular, where I worked before. I'm not quite sure. I think it's only part of the mainstream that is really taking on to that issue.
Absolutely.
I think one of my frustrations has in fact been that I think, for example, Wall Street economists or City of London economists, many of them I think are still sort of ignoring some of these kind of issues. But I'm very pleased that I think, as you said, among gold bugs, among libertarians, among people who already felt or already feel that there are issues with our monetary system, I think the book had a very good reception. And it's interesting that parts of the media have now taken on to this, which is great. So I hope that the mainstream will continue to open up to these issues, and I think as the crisis persists, I hope that will happen. But I think parts of the mainstream have so far ignored it.
Yeah, I mean, of course they have, but you're kind of the first man through the gates, if you like, by getting onto BBC Radio and so on. One of the things that's always seemed, it seemed very obvious to me, I might be wrong, but so many of the problems that we have from the wealth divide between generations, the wealth divide between the very rich in society and the very poor, this financial crisis, the fact that we've all managed to get ourselves into so much debt, the fact that governments are able to print money willy-nilly, all these various problems, the corruption in our financial sector, the mismanagement of money, the improper behaviour, these are all different manifestations of a flawed system of money. And yet, I know you've been on BBC Radio talking about gold, and yet so few people have addressed the fact that it might be our system of money that's at the root of the problem.
That's absolutely correct. In a way, I think you summarized the motivation for writing the book. It's because I worked in financial markets for nearly 20 years. And one of the things that I found so surprising, as you put it, is, working in finance, you realize how the system was getting progressively more unstable. But people did not ask the fundamental questions. Could it have to do with the way our monetary system is organized? And what I found particularly interesting is if we look back in history and see how this system came about, we see that it was often ad hoc political decisions, at in the heat of the moment, if you like, to fix some immediate problem that led us progressively away from gold.
To print the money to play for World War I, for example.
Exactly, to print money from the classical gold standard mainly ended not because John Maynard Keynes came up with better economics. He didn't, as we all know, but not because he convinced politicians. Simply the first start was that Germany left the gold standard to fund for World War I. And if I look at the present fiat money system, which is very unique, our global monetary system, if you look at it from the point of view of the economic historian or the monetary theoretician, it is a very unique system. It did come about finally by Richard Nixon closing the gold window in 1971, which he did because America suffered gold outflows, and he closed the gold window because he wanted to continue, borrow and fight the Vietnam War and do lots of other things. So politicians shook shook off the shackles sort of the gold standard or any sort of gold basis of the monetary system. They wanted to have more sort of room to maneuver, but this was not designed by economists. But today, many mainstream economists apologize, for the system or explain it to us and present it as a superior system, and quite frankly, it is not. And I think more and more people realize this, just looking at the current crisis. And I think I found it staggering how many mainstream economists have become defenders of this system, despite its obvious flaws.
Now, I think we're agreed that the system is flawed and it should collapse. But it often takes the market a long time to do what it should do. Now, how long can we go on with this current system? How long before, Bitcoin or some kind of global metal exchange replaces our current system of money? By global metal exchange, I just mean, you transfer ownership of some kind of metal, whether it's gold or silver or copper, digitally.
Right. Well, it's a tough question because, while I think we can clearly explain that the present system is, as I call it, suboptimal, unstable, and ultimately unsustainable. So it will end, and it will probably end badly, and it will probably end soon.
You think you'd really, when you say soon, what?
As soonish, I mean, I
can't believe it's gone on this long, to be honest.
That's right. It's difficult to put a time frame on because I think one of the interesting things about money is because using an established medium of exchange conveys so many benefits to the money user. I mean, it's that people keep on using paper money, even if it's devalued, even if its inflation rises, or even if it comes with other problems. Switching to a new alternative form of money is very costly, it's a very risky, endeavor. You need a lot of people participate in this, once the state has managed to introduce its own paper money and make it the accepted medium of exchange of the entire population, it's very difficult for alternative forms of money to take the place. It's often only at the point of complete disaster, complete currency collapse. Now, when will we get something? I mean, my sense is the system now is so unstable that something big will happen over the next 5 years. So I always like to say the next 2 to 5 years are going to be very, very interesting. I think we will see some major changes. I say this because sometimes people read my book and think that the analysis of the system of the problems is correct and the longer-term outlook behind it is also convincing, but sometimes people say, well, this may take another 20 years. I don't think we have another 20 years. So I do think the next 2 to 5 years will be very interesting.
One of the big factors keeping the current system afloat is not just the fact that everyone uses it, it's a psychological factor. People still believe in money, and that's because you can buy and sell things with it. But at what point, what's the trigger for people to lose confidence? Is it some alternative? Is it Bitcoin or something that people realise is actually better? Is that the point at which people flee a paper currency? Is it all going to happen extremely quickly?
Yeah. Well, I would say that we use money. Money is first and foremost a medium of exchange, but derived from this core function, there are other functions like a store of value and a way if you like, to stay on the sidelines, to not commit yourself to buying bonds and stocks or buying consumption goods, but stay on the sidelines and keep your purchasing power. People use money for that purpose as well. It is already clear that in this crisis, people have already stopped using paper money to a large degree as a store of value, because that's the reason behind the 10-year bull market, spectacular bull market in gold, is that people already use that alternative form,
and
to
they
store
use
your
bonds
value.
and stocks as well. I mean, I don't think people necessarily buy, Shell because they believe in Shell or whatever the stock is. They buy it because it's a more effective store of wealth than cash.
Exactly. And there are other assets, and you can talk about arable land and forestry and real estate. All of these things have become very important for investors. But gold is obviously a monetary asset, and I think what we've seen is already the remonetization of gold, not for the purpose of transactions, not for the purpose of buying and selling goods and services, but for the purpose of storing restoring, value. So part of that sort of frustration with fiat money is already you can already see in the action of market participants. Now, when will the confidence in paper money really break down? I think for that, I think the two key points I would look at is, well, one is if inflation rises, if aggressive monetary policy leads to higher inflation rates, and then people will look at the central banks to impose higher interest rates to rebuild confidence in paper money. And given the highly leveraged system that we have now, and that system is dependent on central banks supporting it, it will be very difficult for central banks to raise interest rates and fight inflation. So that's one concern. Another, I think, trigger point is a loss of confidence in the ability of sovereign states to fund themselves. As we've seen in situations like Greece and certain other countries, when the market loses confidence in government bonds and starts to sell government bonds, interest rates rise, and that's a huge threat to the entire financial system.
But if the central bank's buying its own bonds...
And we're already seeing the first signs of this. We already see here that even the major bond markets around the world now, the biggest owners in many cases are already the domestic central banks, and the biggest marginal buyers are the central banks. And I think
that's got to end badly, hasn't it?
Historically, it has usually ended, badly. And
there's a historical precedent for central banks buying its own bonds.
Well, I think this is. I found it again interesting how mainstream economists often, make excuses for these policies, because I would say 10 years ago, 15 years ago, most economists would have said that this is only something that's being done in certain Latin American countries, or it was done in Weimar Germany in the 1920s. I think 10, 15 years ago, people would have struggled to believe that at some stage, the Bank of England, the US Treasury would be the largest owners and the largest buyers of government bonds. I have to say the US Fed has not bought US Treasuries really over the last 12 months, but still, the idea, the trigger point here is if the public
if the central bank's buying its own debt, or buying its government's own debt, you wonder why they bother taxing the people.
Well, but I think the public is still buying and owning these securities as well. And I think if there is more concern about the solvency of sovereign states and people sell these bonds or demand higher yields on them, I think then the central banks will have to buy more of these bonds. So I think the problem for me is right now that the system has maneuvered itself a little bit sort of into a dead end. The system has almost checkmated itself. It's very difficult, will be very difficult, or I think almost impossible for the central banks to move away from these policies, to unwind these policies. So they have to continue doing what they've been doing for the last 5 years. And at some point, that will have to undermine the confidence of the public, either in the state's debt and ultimately in the state's paper money. So something has to give at some point.
Yeah, I wonder, I apologise to listeners, by the way, for the noise. We're in the Groucho Club in West London, and we came into what we thought was a quiet corner when we got here, and it's just suddenly got very noisy. But anyway, yes, I wonder, Joe Bloggs on the street, Joe Bloggs who runs the butchers in some market town, how much does he follow what central banks are doing, what governments are doing? He just, runs his butcher shop and runs his business. But but he feels, for example, if the oil price rises, he will feel that in a way that, he doesn't necessarily feel what's going on in the bond market. So I wonder if the trigger could be, a dramatically rising oil price, sparking off inflation. Or, I'm not particularly bullish about oil. I'm not bearish about it either. I kind of see a period of range trading in front of us. But something like that could be the trigger, or suddenly dramatically rising, food costs or something.
I think that, but in individual prices, people often can adjust to a certain set of prices moving. If it's just relative prices moving, if oil prices go up but other prices stay subdued or rise at a slower pace, then people may not blame this immediately on sort of something being wrong with the monetary unit. I think it's more at that point where
but they see the purchasing power of their money falling on a daily basis, and that's when they start, that's when you get the inflation mentality. I've got to buy things today and not save for tomorrow.
Exactly right. And I think the important point here is that once that kicks in, or what this process accelerates, that money becomes a hot potato, that you think, I need to reduce my money balances, I need to go get into something else. That feeds on itself, because this process will immediately rise inflation further. Money will lose its purchasing power even faster if people lose confidence in it. So once the central bank is confronted with such a phenomenon of it, at that moment, the central bank will have to do something drastic to stop that thing spiraling out of control. And historically, that has always meant not only hiking interest rates, but establishing very high positive real interest rates. And I think the
Can you imagine high rates, though? It's just not going to happen.
Well, that is the problem now, because central banks have maneuvered themselves, or have been maneuvered into a position where they are the backstop to the entire system, to all the banks. They're still supporting certain asset classes. They are now managing the yield curve, openly via Operation Twist or quantitative easing in Britain. Central banks have taken it upon themselves to underwrite the banking system, to make sure that interest rates stay low. So once there are inflation concerns in the system, or, as I said before, concerns about solvency, the central banks will have to buy even more, and they have to do that by printing more money, and that will undermine confidence in money even further. So I think that is the real danger here, and that's why I think the key criticism I have of policies like quantitative easing is not that they are inflationary right now at this very moment in time. As we all know, a lot of the money that is being produced is right now stuck in the banking system or in the bond market. It's not really, it's not really being used by the butcher that you mentioned as an example, and it's therefore not affecting that many prices. But by running these policies, central banks fix prices, they keep interest rates artificially low, they manipulate asset markets, and they have to keep doing this because market forces are pointing the other direction, and central banks are stemming themselves against these market forces. And it will be ever more difficult for central banks to change policy.
How do you see things? Again, I apologise to listeners about this. It's a bloody riot in here. A lot of people appear not to have seen each other for a long time. How do you see things developing socially as the monetary system unravels? Is that you winced when I asked you that question? Is that in other words, you don't think they're going to develop nicely, or it's not something you've thought about? Or?
No, I think I'm just very, very concerned about it. And listen, I try in my book and on my blog and in my speeches, I try not to come across as a scaremonger who just, I hate to be seen, and I hope I'm not seen as somebody who just wants to draw attention by painting drastic scenarios. But fundamentally, I believe that the system in its present form is unstable, and a painless exit right now is impossible. So there will be some pain down the road. And I'm very concerned about the social consequences, because I think the problem we have today is that large parts of society have now come to look at the state as sort of the answer to all their problems. And, to a very large degree now, many people are dependent on state transfers, on, the state health system and the state pensions. And I'm still a bit surprised again by how people perceive things like the crisis in Greece, because I think the one conclusion I wish people would draw from this is sort of like how dangerous it is to rely on the promises of politicians. That's what you ultimately do. Now, these politicians do not create wealth. They don't create the money that they spend. They don't, raise the money they spend. They either borrow it and create a lot of debt, and all these governments create massive amounts of debt, including Germany, which, funny enough, is now seen as sort of a model economy in Europe. It's a highly indebted country. Now, so all these governments incur all this debt, and they're relying on very easy monetary conditions, and they're relying increasingly on the help from their central banks. This is a very unstable position. So when this cracks the system, a lot of people will look to the state. They will demand their pensions, their health service. As we all know, society is aging, so a lot of people will be older, and they will definitely rely on the state, and they come to rely on the state. And the money will just not be there. So I think, I'm not saying this lightly.
Or it'll be there, but it won't buy you anything.
Exactly. Well, I think one way to get out of this is for the state to just print the money, but then it won't buy you anything real. And so in a sense, I think there will be social upheaval. It will be a massive challenge for democracy.
Do you think even in countries like the UK and the United States and these
Absolutely.
wonderful first world countries?
Absolutely. I think perception is here very misleading. I mean, looking at Britain, it's my chosen home, right? I mean, it's my I've lived here for 16 years in London, and I love the place here. It's a great place to live. Having said that, I am concerned about the future, considering that Britain is one of the most highly levered societies on the planet. I mean, overall debt, public sector debt plus private debt, is more than 5 times GDP in Britain. And again, as I said, large parts of British society depend on the state. And another part of society depends on being able to borrow or roll over debt at very low interest rates. So everything is built on, easy money, and limitless funds from the government. It's a very dangerous situation, and I think even the timid attempts by the present government to cut back on government spending, have not been received well by the electorate and by the public and by the media. And I just wonder how this will all turn out when money really runs out. And when
are we looking at kind of hyperinflation of the kind of Weimar, the Yugoslavia, the Argentina models?
Well, what I say in my book is, the short answer is yes. I do think that is still a very possible option, and I think it's probably the most likely option in my view. I think there are always, at some stage, after you have an extended period of monetary expansion, you are left with 2 choices. Either you stop printing money, you allow the market to set interest rates again, and the market will then liquidate a lot of the imbalances that you have accumulated during the monetary expansion. So that's option 1. You stop printing money and allow the cleansing. That's painful, but I don't think it's quite as painful as what happens if you continue printing money, which is, I think, also the more likely outcome for political reasons. So it's not deemed politically acceptable to go through the correction. So the second option is to just continue to print money, but then you will have to keep doing it and keep ever more of this, because imbalances will not be liquidated, they will just accumulate. And so you will have to print ever more money. And as I said before, at some stage the public will lose confidence. Money becomes a hot potato, and then you can quickly lose control and it spins into hyperinflation. These are the 2 options. And so we still have choices. Neither choice is particularly appealing.
I always like the fact that you described that money has become a political tool, and it shouldn't be, and nor should it ever be.
Yeah, I think that is my very, very strong belief. And I think if we take one thing out of this crisis, I think we need to go back to a monetary system in whichever form, in which money is apolitical, in which money is again a medium of exchange. Money is obviously essential for a working capitalist economy. A market economy is based on the free and voluntary and contractual cooperation of people on markets, using market prices, using the exchange of private property, using contracts. For that, you need a stable medium of exchange. And stability is not just defined, I think, as a central bank keeping inflation within a certain bound. It is really sort of that, money is entirely outside the political process. And it also means at times you need to allow prices to drop. If the demand for money rises sharply, I think then the purchasing power of money needs to go up, and we need to go through a period of deflation. I think ultimately, we need to take the state out of money and banking and finance. So what I argue is what we need to go to is the separation of money and state, if you like.
Did you have grandparents who lived through Weimar hyperinflation? Have they told you about it?
That's a good question. No, I mean, I had grandparents who lived through it. I have to say my grandparents were born in the very early in the 20th century, so they were during the 1923 Weimar inflation. They were still teenagers. So no, I never spoke to them about that specific experience. I think part of the reason is simply that I think for that generation after the inflation, which was horrific and decimated the German middle class, then obviously after that came fascism and the Nazi regime, and then the Second World War. And I think looking back on sort of their own experiences, I think that generation spoke much more about the war and the years after the war. The years after the war were also full of hardship, and then obviously the rebuilding of Germany. So I think if the generation spoke to their children and grandchildren about their own experiences, I think it was more related to the war years and the inflation years. Having said that, I think again, there's not ever only just one cause for an historic event, but I do think clearly the 1923 hyperinflation in Germany played a key role in, preparing the ground politically and culturally, if you like, for Nazism and fascism, because it decimated the middle class.
Yeah, and that's what worries me is if our currency does collapse and there's a lot of some kind of inflationary pain, or money loses its power, is what happens after that worries me. What people, the worrying thing is that people, instead of turning their back on their governments, will turn on them to do more.
I think that's a very, very valid concern. Now, my hope is that if paper money collapses or we go through a major currency crisis, that hopefully people draw the right conclusions from this. But there's also risk, as you said, they ask for strong government, and then we get, new forms of paper money. I mean, I think you could imagine governments imposing sort of only purely domestic currencies that there's not going to be international exchange of money. You lock down the economy, and all these would be disastrous. Policies that hinder wealth creation, that are enter prosperity and enter freedom and enter personal liberty. So I think it will be a very different society. But there is a risk that in the crisis people ask for a strong state, and we even move into more totalitarian structures. There is definitely a clear concern.
Have you followed the history of the inflation in the what do you call it? The
Austro-Hungarian.
The Austro-Hungarian Empire around about 1919, because it's quite similar to what's going on in the euro today, in that there were 4 or 5 countries in that empire that maybe should have been independent. You have Austria, Hungary, Yugoslavia. Was the Czech Republic, Czechoslovakia, part of that empire? And they were all operating with one monetary union, but maybe different levels of interest rates applied to different parts of that empire.
Yeah, I have not looked at it specifically for my book. I heard people make that analogy. I think in general, sort of again speaking not as an historian but as a monetary theorist, I do think that I have no problem with common currencies. I don't think there's a problem with many different nations sharing the same monetary unit. In fact, I would not be an advocate or a defender of a gold standard. If I had that view, if I thought that each nation needs its own money. I think the idea that each government or each sort of local political entity should be able to print its own money, impose it on its population, and then sort of inflate it or debase it according to need. I think that's sort of a fairly new idea, which is more the result of sort of 20th century nationalism, I think, than really sound economic thinking. There is no. Let's put it this way: money is a medium of exchange. It should further economic cooperation, voluntary exchange between, human beings. Capitalism doesn't stop at borders, and human interaction and trading and selling and buying doesn't stop at borders. And I think increasingly
in our nature,
No, exactly. And then now increasingly we live in a globalized world where we, produce things all over the world and buy things all over the world. The idea that sort of there is such a thing as the British economy or the Greek economy that somehow stops where the power of the Greek state stops or the power of the British state stops, and that the government needs to be in charge of a local form of money that it can then manipulate to according to the needs of that local economy. That's increasingly a myth. That companies may be based in the UK and they produce in China and they sell in Europe. So in a way,
imagine how much easier it would be if there was just one metallic standard throughout the world.
Absolutely. There is a reason why throughout history...
The amount of times you buy something in another country and you make money on the trade and then you lose money on the Forex. Yeah. Forex isn't new wealth creation, is it?
Exactly. No, I think the foreign exchange markets are very impressive, but they are a second best solution. They're sort of like a stopgap.
All there is just transference of wealth, though. It's not creating new.
No, it's not. But it's obviously a means to, Because if I generate income in the UK but want to spend it in the US, I cannot send my gold over as I could under a gold standard. I would have to find somebody who does the opposite trade, who is happy to buy my sterling and my pounds and give me US dollars. The foreign exchange market does nothing but help people do that, and with the bank as middleman. And but it's not I think it impresses a lot of people, the foreign exchange market, and many people think it's the epitome of modern, financial capitalism. But it's not really capitalistic. A capitalistic system, the free market, would over time develop global monetary units. And if you imagine, Chinese companies would not only produce and buy and sell and price in gold, but they would run they express their balance sheets and their income statements in gold. Companies would, buy and sell shares in one another and invest in other countries. All of that would be easier because you would not suffer the risk of, currency appreciation or depreciation. A lot of companies that produce and buy and sell have to buy very expensive hedging products to deal with currency risk, and a lot of that is
it's like a lawyer or an accountant. It's just not needed. It's just
but in a way,
health and safety.
This is all the result of all these governments around the world insisting that they want to have their own local paper money that they can produce at will.
Let me ask you,
central bank.
Absolutely. Let me ask you one last question, Detlev. What about the possibility that we just muddle through and arrive at some kind of global money standard?
What do you mean by global money standard?
Well,
global paper money? Or,
some global system of money that's accepted worldwide. I think that's inevitably what's going to happen, whether it's a government money or or it's a free market money. But whether it's Bitcoin or whatever it is. But I mean, I think that's where money is going.
Yes.
But it might be 30 years away, or But what about the possibility that paper money doesn't collapse and we just kind of muddle through to that?
Well, the problem I have, I could see a global money develop, and I hope that it is again an apolitical form of money that is not under the control of any kind of politician and any kind of nation or political party. So a global gold standard would again work, or maybe Bitcoin, or maybe there are other solutions that I can't even envision right now. So global money I'm a big fan of. Now, whether we muddle through paper money, I think the problem is, what I argue in my book and what I strongly believe is that if you have a form of elastic money, a form of money that is created in such a way that money is constantly expanding and new money is constantly being injected into the economy, that must create economic imbalances. So if paper money means that, as it does today, that it's a form of money that the central bank issues in such a way that it's constantly being debased, it's constantly inflated, so you constantly issue more of it. You must distort interest rates, it must lead to capital misallocations, you must get business cycles. So it's unstable. And so the only way you could stop this is obviously if you make this form of money fairly inelastic. So you could argue, what if the central bank wouldn't manage inflation or the unemployment rate or all these other things that modern central bankers look at, but if the central bank would just keep a fixed supply of money? At that stage, they would basically mimic a gold standard, because the gold standard is, it's not entirely inelastic.
You can't do that because private money, because a lot of money gets created through private banks and lending and so on and so forth.
Yeah, and there is a big debate out there which is very interesting about to what extent should you even restrict private banks from issuing money substitutes or near monies, fiduciary media as it was called, so like bank loans, so bank deposit or other forms of near money that are often can often be converted into money proper, into state paper money or gold or whatever is the monetary base. But so should we even restrict the ability of private financial institutions to issuing sort of monetary substitutes? My personal view is it's impossible to do this, and I don't think it should be done.
No,
so there will always
be. I'm saying
be.
The state can't limit the amount of money in circulation because of the fact that money gets created through these private bank substitutes.
But I do think that the key problem with the present system, in my view, is the very high elasticity of money. The fact that not only financial institutions able to issue money. They have the full backing of the central bank behind this. Central banks encourage banks to issue more money and create more money. And central banks do this by providing a lender of last resort function to the banking system. Banks can now create much more deposit money. They can lower their reserve ratios much more than they ever could do this before, simply because they know they have the backing of a central bank. And that central bank can create bank reserves, base money, the raw material of the banking business, without limit. And now the banks also know that the central banks will not allow banks to go under. So in a way, the expansion of money, the extension of bank balance sheets can now be extended to a degree that has never been possible under something like a gold standard. I'm not arguing. I mean, you could operate a capitalist economy even with a completely inelastic and fixed supply of money. There would be slight secular deflation. There would not be a problem. You could do this. We will probably never have this because somebody will always create monetary substitutes and near money. Somebody will manage to issue financial instruments that behave like money or are being used like money. And that process will always make the money supply somewhat elastic. My issue with the present system is today we have a hyper-elastic monetary system in which at the basis of it is not something that is outside the control of central banks, but that is completely under the control of central banks, and that can be created without limit. And that sets a very unstable foundation of the monetary system. That is the key problem. So if paper money always means that is a system we're going to have, I think that is a system that is inherently unstable and suboptimal. And so if you fix the key problem with it, which is the high elasticity, if you stop central banks expanding the monetary base, you may as well go back to a gold standard. Why not have a beautiful international system than a patchwork of local fiat monies?
Very good. Detlev, thank you very much indeed. As we close, why don't you give out your website?
My website is papermoneycollapse.com.
And you put up blogs every couple of weeks on there, and I must say they're excellent. Is that right, every couple of weeks, or is it more frequent than that?
Well, there's not a specific pattern. I try to publish something once a week, but sometimes it's even 2 weeks before I write something new.
Okay, and the book is?
The book is Paper Money Collapse, The Folly of Elastic Money and the Coming Monetary Breakdown by John Wiley & Sons.
Published by John Wiley & Sons and available at Amazon, and we'll put a link up and everything else.
Right.
Detlev Schlichter, thank you very much.
Thanks so much, Dominic.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.